All this money printing is destroying the value of our dollar, and Americans are noticing and they are starting to lose faith in the dollar. So if you are wondering what you should be doing with your money, make sure you watch this video until the end. What's up everybody, I am Jaspreet Singh from theMinorityMindset.com and welcome to The Minority Mindset. The United States government is spending money faster than a kid with an unlimited credit card at Gucci. In 2020, the United States government is going to borrow $5 trillion to pay for all of their excessive spending. To put it in perspective, back in the early 2000s when George W. Bush was president of the United States, many people criticized him of being a reckless spender because he borrowed $5 trillion over his 8 years of being a president. Now in 2020, we're about to borrow the same $5 trillion in 5 months. This excessive spending and money printing has Americans losing faith in the value of the dollar and our economy, which is why you saw the price of gold shoot up to over $2,000 an ounce, and it's why you saw the price of Bitcoin shoot up to over $12,000 a coin. We are living in a day and age where politicians are printing money like it's their job so they can hand you free stuff so they can buy your vote without a single ounce of concern of how this is going to affect the economy, your savings, and your earnings. Believe it or not, free money is one of the most expensive kinds of money there is. Here's the issue. Back when this pandemic started, our economy was completely shut down. Businesses couldn't make money, people lost their jobs, and nobody could pay their bills. That's when the United States government passed the CARES Act to stimulate the economy, which cost the government right around $2 trillion. It sounds great, except the government isn't as rich as many people think. I mean, the government didn't just have a couple $1 trillion laying around to fund this, so they had to borrow this money. So in order to fund the CARES Act and some other stuff, the United States government had to borrow $3 trillion between April, May, and June. But $3 trillion clearly wasn't enough because now this pandemic has not gone away and we are in a recession, so the government is talking about a new stimulus plan which will cost at least $1 trillion. At the time of me recording this video, the second stimulus plan bill has not passed yet, but it's in the works. Democrats have proposed a bill that will cost at least $3 trillion, and Republicans said, no way, we can't afford that, and so they proposed a plan that costs just over $1 trillion. Oh, and I should also mention that President Donald Trump signed a new executive order which would result in more money printing and borrowing. Add all these costs up and the United States is borrowing $5 trillion in 5 months. Printing $1 trillion a month almost sounds like one of those get-rich-quick schemes that you see on Facebook where people stand in front of you and they say something like, hey, follow my secret system and I will show you how to make $10,000 a month guaranteed. But now it's going to be people saying things like, hey, follow my secret money printing machine and I'll show you how you can print $1 trillion a month in less than 5 months. Results are not guaranteed. Always do your own due diligence and never blindly listen to a random guy on YouTube. At this point, you might be wondering, where's the government borrowing all this money from? And why do I keep talking about money printing? And how is it going to affect you and your money? Well, you're in the right place because that's what we're going to be talking about in this video. So make sure you watch this video until the end because you don't want to miss any of these key details. But before we get into that, smash that thumbs up button below because if you don't, well, the way the YouTube algorithm works, YouTube will be less likely to show you any of our other financial news and education videos. The government gets their money to pay for public services. So teachers, police officers, roads, and politicians, when you work hard at your job through taxes. The harder you work, the more taxes you pay. So when you get a raise, so does the government. When Americans work really hard and they produce a lot of value and they make a lot of money, the government's really happy because that means you get to make more money, and so does the government because you get to pay more money in taxes. In an ideal world, the government would make some money. Let's say they make $1 trillion through taxes and they would spend $900 billion and they would save the other $100 billion in a crisis fund, or as you might call it in your house, an emergency fund or a savings fund, but the government would save this $100 billion just in case there's an economic crisis. I know, I sound like a crazy radical right now, saving money for an emergency, sheesh! In real life, what happens is the government makes money, let's say they make $1 trillion, and then they're gonna go out and spend $1.3 trillion by borrowing the other $3 $300 billion. The next year it's the same thing. The government's gonna make maybe $1.1 trillion, but their expenses are gonna go up to $1.4 trillion, and now they have to pay interest on their old debt, so now they're gonna go out and borrow even more money to cover their costs. And the year after that it's the exact same thing. Your income might go up a little bit, but your expenses go up, and now you have more interest to pay because you have more debt, so now you go out and borrow even more money. It's reckless spending and horrible money management. I mean, if the government was a person, you'd be seeing reaction videos of them on Facebook. So this government person has like $100,000 of credit card debt, right? And they spend how much money at Gucci? Oh my God! When the government spends money that they don't have, they have to borrow this money, and they can't call up Chase Bank or Bank of America. They go to a foreign country like China. Hey China, this is the United States. You want to loan me some money? But the United States isn't really getting along the best with China right now, so that's probably not going to happen. If the United States can't borrow money from foreign countries like China, then they're going to go to their best friend, the Federal Reserve Bank. The Federal Reserve Bank, or the Fed, is known as the central banking system in the United States, except the Federal Reserve Bank isn't federal. I mean, it even says so on their website. They're not a reserve because they don't keep cash reserves. And they're not a bank because you and I can't go there to deposit money. The Federal Reserve Bank is a privately run institution run by some very powerful people, and their job is to control our money. So when the government needs money, they call up the Fed and they say, hey, we need $3 trillion. And they'll say, okay. And then they work with the Treasury Department and they go over to the money printer and they push a few buttons, boop, boop, boop. And then out comes a few $1 trillion. And then the Fed is going to give this money or loan this money to the government, and problem solved. The government got the money they need. They can spend it or give it away however they want, and everything's back to normal. Actually, it's better than normal because what's better than free money? Except here's the issue that some people are starting to notice. There's a cost to printing all this free money, and some people are starting to get worried. As more dollars are printed, the value or buying power that each dollar that you have goes down. Think of it this way. If I gave you this $100 bill today and I gave you a restriction that you can't spend this $100 for another 10 or 20 years, well, this $100 is going to buy you more stuff today than it will in 10 or 20 years. To put it in perspective, you need more than $600 today in 2020 to buy what $100 could back in 1970. So as more money is printed, the value of your savings account begins to drop because, in case you weren't aware, your savings account isn't growing because your bank isn't paying you much interest, but at the same time, the price of everything else is going up. So your savings account stays here, but the price of your rent, your groceries, and everything keeps going up. And your paycheck is gonna feel a little bit smaller. If your rent goes up and your groceries get more expensive and Chipotle charges you more money for extra guac, then your paycheck might look the same, but it's gonna feel a little bit smaller because that same amount of money doesn't go as far. This is why people have been converting their cash into gold and Bitcoin and stocks, which is why you've seen these things rally, because people are losing faith in the dollar, so they're trying to convert their cash into something hopefully safer. Not to mention the fact that the Federal Reserve Bank has been pumping up the stock market, but I'll be talking about that in just a minute. Gold, and for the sake of this example, Bitcoin, are meant to be hedges against inflation, so people are trying to turn their cash into something like gold or Bitcoin, which has a limited supply out there. That way they can protect their wealth and their money. We saw something very similar happen during the 2008 crash because people were very worried about their dollar and the economy, so they started buying up gold, and that's when gold first hit right around $2,000 an ounce. And then after the 2008 crash, the economy started to recover, and then gold prices crashed, and now gold prices are right back up to around $2,000 an ounce. Now, I can't predict the future. Maybe this is going to be a repeat of 2008, where gold prices shoot up, and then once the economy recovers, gold prices will come back down. Or maybe this time, people are going to be more worried about the economy and the dollar, so gold prices will continue to go up. I don't know. What you need to understand about gold and Bitcoin is they are there like a hedge. It's almost like insurance against a worst case type of scenario. They're not there as an investment like stocks or real estate, which are supposed to produce you more value. Stocks work a little bit different because when you buy stock, you're buying shares or ownership of a big company, and this company is working hard and hiring employees to make more money, because when this company makes more money, so do you, because then the stock price should go up. When you buy gold, it doesn't do anything. It just sits there and stares at you, which is why it's kind of like the insurance of investments. What's also been boosting stock prices is the Federal Reserve Bank, because because they have been working hard to print money to pump up the markets. The Fed believes that if stock prices are higher, then you, investors, are going to feel wealthier, and then you're going to be more likely to go out and spend money, which would stimulate the economy. So the Fed has been printing money and pouring money into the markets to pump up the value of the stock market, which is great if you own stocks. But if you don't, then you're just the one paying the price through inflation. Now, let me make sure this is clear. Investing has risks. You are never guaranteed to make money when you invest, but the Federal Reserve Bank and the government want to see a strong stock market, especially in 2020 because, well, let's just put it this way. It's an election year. Before I get into what's happening in our economy and what might be coming, if you do want to invest in stocks, you have to use a stock brokerage like our sponsor, Webull. Webull is super easy to use. All you have to do is create a free account, fund it, and then you can buy and sell whatever stocks or ETFs you want without paying a penny in commissions because Webull is a commission-free brokerage. Plus, you can research stocks and chat with other investors right on their app. And the best part of all is that Webull is giving you, Minority Mindset fans, 2 free stocks when you start investing with them using our link in the description below. You get your first free stock when you just create your free account, and you get your second free stock valued at up to $1,400 when you deposit $100 in your account when you use our link in the description below. Fair warning, this promotion might not always be around, so you want to take advantage of it while it's still there. And Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account, and they don't charge you a penny to make a trade. So if you want to learn more, start investing, and get your free stocks, I got the link to where you can do that in the description below. We are in a weird situation in our economy right now because the Fed has been going out of their way to print money because they want to increase inflation. There are 2 kinds of dollars that you can spend with in our economy. You have the cash in your wallet, which let's call money, and then you have the invisible money, credit or loans. Remember what I said in the beginning of this video? The value of our dollars depend on how much money is out there. Well, this money is comprised of cash and credit. And if it wasn't obvious, the United States runs on credit, right? I mean, it's not how much money you have that matters, it's how much money you can qualify for through credit that matters. I'm not saying this is what's right, I'm saying this is how our economic system works. When this economic crash happened, our credit markets dried up. People lost their jobs, which meant they were no longer creditworthy because banks didn't want to lend to them anymore, and so now there was less dollars in circulation because people weren't able to borrow money. This is what deflation is because there's a smaller supply of cash available to spend, not because there's less money out there that people have in their wallets, but because there's less credit available to spend. Deflation works the opposite of inflation because now businesses have to cut their prices because people don't have money to spend. This might sound like a good thing because things get cheaper, but deflation also means that your boss has to cut your salary because your business isn't making as much money. To prevent this type of deflation from happening, the Fed has been working hard to print money, and one of the places they're putting it is in the markets. The concern that I have is, okay, we're working hard to print all this money to fight off deflation, but what happens when our economy recovers and our credit market recovers and now we have all this excess cash in circulation? What's going to happen to the value of our dollar then? I'm not alone in this, and so many people have been wondering and trying to figure out how to use their money the right way, that way they can protect their wealth. And this is where financial education comes in handy, because financial education is what teaches you how to use your money so you can take care of yourself and so you can build your wealth without relying on anybody else. And if you're looking for an easy way to up your financial education, well, that's why we wrote a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get our free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to see why I rejected tens of thousands of dollars of free government money, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.